So let's start with the investor. Investor says that he's been viewing our content on YouTube from many days now and he finds it's valuable and helpful. So thank you so much, sir, for viewing the content, and I'm glad to know that it is helping. And he says that he has been investing in shares from last 7 to 8 years and he has attached his holding and he wants us to review his portfolio. So let's start the review. So let's start with the first company. First company is Bharat Electronic. Quantity is 2550. Investor amount is 1,18,000 and current value is 2,52,000 and the profit overall is around 112%. So this is a PSU, sir. So you know my opinion if you're watching my regular videos, what opinion I have on PSUs. On this share currently you're getting good returns. So if you want you can continue also, because if this share goes up from here then you will start seeing the impact of compounding. But how much of this share will go up from here, that nobody can know. And here you can see the return profile for BEL, and if you look at the profit compounding, you will see that in 10 years the profit compounding is 11%, and in 5 years, 3 years and 12 trailing month the profit compounding itself is in single digits. So when the profit compounding itself is in single digit, then you will hardly see that share providing you return in double digits. And the sales compounding also you can see it's not very great, although some of the sales figures are in double digits, but they are on the lower side of the double digits, which you can see is 10% or 12%. Return on equity is good, and the stock price CAGR is looking good right now because recently this share has provided a very good upside. So all comes down to the conviction. If you have conviction on this company, then you can stay invested with this company. And in the stock price CAGR, you are currently seeing good numbers in 1 year, 3 years, because of which the CAGR percentage of 5 years and 10 years has also improved. If you'll remove what this company has performed in the last 3 years, then you will see that the company has not provided very good returns. And this company we know deals generally for the defense services. It provides electronic equipment requirement to the Indian defense services. And we have seen recently there is a lot of focus by the government on the defense services, and that's why you saw a rally in this company also. But this rally will not be very consistent. So the decision is completely on you whether you want to stay invested in this company and continue, or if you want to book profit or invest in some other market leader which can grow your money at a consistent rate. Next company is Adani Wilmar. Quantity is 65. And this seems to be the price for the IPO, so I think you got these shares through the IPO, and currently you are getting a profit of 136%. So for this company also there is nothing too great about this company in my opinion. The only unique thing about this company is that it belongs to the Adani group, and we have already seen what has happened to the Adani group. So it is very volatile, very risky. Investing in Adani companies are for people who do not want to sleep properly in the night. But I can see that you got it at the IPO price, so you are still safe, you can still relax and sleep. Again, a choice is with you whether you want to continue or you want to sell this company. At this price and at this level, you can try your luck also, just in case if everything works well for Adani and Adani shares can start performing again, then you can also expect good return. But if it does not, then you may get stuck with this company also for a very long time. So we can say it is a gamble and it is completely on you whether you want to play it or not. And the reason here you can see for Adani Wilmar, the profit growth is not very exceptional that it can provide you exceptional return. 5-year profit growth, 3-year profit growth looks good, but in the 12 trailing month it is down by 17%. Sales also is okay, 5-year 18, 3 years 22, and 12 trailing month 16%. And if you compare these figures with some other company in the FMCG sector, you will be able to find better companies who are growing at a better profit rate than Adani Wilmar. And one example if you want to look at is, or if you want to do your research on that company, is VBL. Next company is Gillette India. Quantity is 3, invested amount is 14,900, and there is no profit no loss situation right now. And now I'm at the chart for Gillette India, and you can see that in this company 5-year return has been in negative 29%. So if somebody has invested in this company from last 5 years, they are still in negative, and maximum return are just 429%. So in the period of almost 23 years, this company has provided just 430% return to its shareholders. And the reason you will see in the profit numbers, you will see that the profit of the company is not growing at a healthy rate. You can see how the profit is growing. It's in 3-4%, which is very bad. And the sales growth also is not at all very healthy. It is again very less. So until a company is able to grow its profit and its sales, you will hardly see that company giving you good returns. And the same you can see in the CAGR returns also. It's a consistent negative return providing company. In 5 years, 3 years and 1 year, it has provided minus 6% return. So my opinion on this stock is that I will never invest in this company. And since this is the second FMCG company, let me show you some other company which have better returns and better profit and sales growth. So now we are at the return profile for VBL, and you can see the difference clearly. The profit compounding has been very good in terms of 10 years 51, 3-year, 5-year also close to 50, and in the last 12 trailing month it is 118. Sales growth also you can see it's very good, and that's why you can see the CAGR percentage is also very handsome. So I'm not saying that you have to buy VBL only from the FMCG sector. You can look at other companies also, but do check the chart pattern, do check its previous return, check whether the company's profit are increasing at a healthy rate or not, and the sales are also increasing or not. If the profit and sales are not increasing, then you should avoid that company. Only go with companies whose profit and sales are increasing. Next company you have is Pidilite Industries. Quantity is 12, invested amount is 26,000, and currently there is a profit of 4.69%. So Pidilite Industry is a good company. It is a market leader in its sector in sealant and adhesive. With this company you can continue. Next company that he has is Procter & Gamble. Quantity is 5, invested amount is 47,000, and currently there is a profit of 42%, close to 20,000 rupees. Sir, this company is also a okay company. Do not expect too much chamatkar from this company. You can see the profit growth. Profit growth is in the lower double digits, 10-year 12, 5-year 6, 3-year 11, and 12 trailing month minus 12%. Sales growth is also in the lower double digits, and similarly you will see the CAGR percentage are also not very impressive and not very consistent also. One more company that you can look at is Tata Consumers from the FMCG sector, because you can see the profit growth for Tata Consumer is much better than these companies, and the sales growth is also good, and the stock price CAGR is also much better than the other old companies which are Procter & Gamble, Gillette, who are not even able to grow their profit and sales at a healthy figure. Next company that you have is Happiest Mind. Quantity is 45, and currently there is a loss of 13%. So this company is fine, and you have invested a small portion also, so you can stay invested in this company for long term. In the long term there is a possibility that this company can give you good return, because the profit of the company is increasing at a very healthy rate. Next company is Info Technology. Quantity is 156, invested amount is 1 lakh rupees, and currently the profit is around 129%. Now let me check whether this is Infotech or some other company, because in this app I'm finding it hard to find out the actual company. So I don't know which company is this, so I'm not able to give you my opinion on this company, but it seems you're getting a very good return on this company. Do the same thing on this company also. Check its profit compounding. If this company is able to grow its profit at a healthy rate and sales also, then you should continue with this company. Next company is LTI Infotech. So I think this is LTI Mindtree. This is a good company. You should continue, no doubt about it. You can hold it for long term also. Next company that you have is Coal India. Quantity is 100, and invested amount is 25,000. Current value is 22,000, and currently there is a loss of 11%. So now I'm at the chart for Coal India, and if I look at 1 year return, it has provided 18% return, and if I look at 5-year return, you can see that this company has still not recovered the money of its investor in the period of 5 years, so it is still down by 26%. And if I look at maximum chart pattern, you will see in the maximum chart pattern also, it got listed in 2010. Till now it's been almost 13 years. It has provided a negative return of 35%, and this is not fulfilling our first criteria, which is a criteria of a chart pattern going from the bottom left to top right. It is going in the opposite direction, you can see. So this is a company which I will definitely avoid. It has a lot of negative points. One is the chart pattern first, second is the PSU sector, third is the business that it is into, which is the coal. The entire world is moving from the non-renewable sources of energy to renewable sources of energy. Fourth will be its financial, and here you can see the financials of the company. 10-year profit growth, you can see it's just been 2%, 5-year 13, 3 years 0. In the last 12 trailing month only you are seeing an upside. Sales growth also is in single digits all throughout 10-year, 5-year, 3 years. Only in the last 12 trailing month you are seeing an upside, and the stock price CAGR we have already seen. I do not see any point in investing in this company. There are much better companies available in stock market, and try to go with private companies. And why I keep on saying this is because the main objective or the main purpose of PSU companies is to service the people, provide services to the general public, and not to show the profit growth or to provide benefit to the shareholders, which are us. So we are the public also, but when we invest in the shares, we become the shareholder. So from the public point of view, you may get benefit from the public services company, but as a shareholders, it is not a good idea to invest in those company. Next company is CHEENT. I do not know what this company is, but let's see. Quantity is 5, invested amount is 1,880, and currently there is a loss of 6%. So this company seems to be Chemcrus Enterprise. So when I looked at the profit growth and the sales numbers, everything looks good. So I think you can continue with this, sir, because the profit growth is also healthy, sales growth also is very healthy, return on equity also looks very decent, and stock price CAGR return have also been very good. but it is a small cap company, so do keep a track on the quarterly numbers. If the company keeps on performing the way it has shown the profit and sales growth, this company can give very good returns also in the future. Next company is Asian Paint. So with this you can continue. It is a market leader, so we don't have to do much research on this. Then we have Lac, and quantity is 300. Invested amount is 1,13,000 and currently there is a profit of 9%. And now I'm at the numbers for Lac, and with this company I think, sir, you should not continue because you can see the profit growth for yourself. It's in negative. Let me show you again. It's in negative. Sales growth 5 year, 3 years, single digits, 12 trailing month and 17%. Stock price CAGR return you can see for yourself. So it does not look a very promising company to me. If you want, you can invest the remaining amount of this company into Asian Paint, or if you want, you can also look at Berger Paint. That company also is very good and it is currently available at a very good discount also. But please, again the same disclaimer, do your own research and study and then only invest and take any buying or selling decision. In case you want to know about which site I'm using to look at all these details, the site name is screener.in. Next company you have, sir, is Avenue Supermart. Quantity is 10 and invested amount is 41,000 and currently there is a loss of 15%. With this company, sir, you can continue. This is a good company from the retail segment and this company will grow its stores in the next coming years also. Next company you have is Tata Motors. Quantity you have is 1,000 and invested amount is 2,83,000 and currently you are getting a profit of 47% on this company. With this company you can continue if you are betting on the EV sector, and if you are also betting on this company because of its recent performance, the recent capture of market share by Tata Motors. So this company I also think can do better in the next few years, although it belongs to the auto sector which is very cyclical, but provided the performance that Tata Motors is showing in the last few years and its movement into EV, we might see some change in this company. Next company, sir, that you have is Bajaj Finance. Quantity is 6. With this company, without even checking, you can continue. Next you have HDFC Bank. Again, good company, you can continue. Next company seems to be HDFC Life Insurance. I am not sure which company is this. HDFC STA. So I'm assuming this is HDFC Life Insurance. If that is the company, this also you can keep in your portfolio and you can continue. Next you have is SBI Card, and this also is a okay company. The profit are growing, so maybe this company can also give you good return. And the last company that you have from the chemical sector is Deepak Nitrate. Quantity is 25, invested amount is 50,000 and currently there is a loss of 9%. So this company also you can continue, sir. Deepak Nitrate is a leader in the sodium nitrate business. It has 70% market share. So this also is a good company, in the long run can give you good return. So these were my views on the number of companies, and so these were my views on the companies that you had in the portfolio. EL, FMCG sector companies, Coal India. So these are the companies which looked little weak to me. In case you want to invest in other companies, you can look at Titan, you can look at SDFC. I know it is already there, but the quantity is very less. So if you want, you can increase your holding into banking and finance sector, because in Nifty also, if you'll see, the maximum holding, the maximum percentage of allocation that Nifty has is into banking and finance companies. Because for any economy to grow, the banking and finance sector has to grow. So that's why you can also give good allocation to this sector. See, FMCG sector is a safe sector, but it will not give you good returns. In case you want to go in FMCG sector, then you go with companies which are growing their profit at a very good rate, because in this share market, profit growth is the king. The stock price eventually follows the earning growth. This is the rule that you need to remember. If a company is not showing earning growth, profit growth, then you will also not see the share price growth. And in case you are seeing that without an increase in the profit growth, then there is something wrong, something fishy. You should absolutely stay away from those type of companies. So I hope, sir, this video was helpful. In case if you want to get more idea on the portfolios, you can review other portfolio videos also. You will get some good companies from those portfolio reviews. And last disclaimer before closing the video again, please do your own study and research also. The final decision should only and only be yours, because you are the one who is going to hold these companies. If you'll not have conviction on these companies, then even if you buy the company that I'm saying, or if anyone else is saying, you will be tempted to sell those companies when those companies will show a discount or will go down temporarily. That's all in this video. If you like the video, please hit the like button. This will motivate me to make more videos. And also, if you have any suggestion or if you want me to make a video on any specific topic, you can mention it in the comment section. And if you are new to this channel, do hit the subscribe button so that you can get regular update whenever there is a video uploaded. So bye for now. We'll meet in the next video with some new information. Thank you.